Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, October 8th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice right here that price has closed above the 3400 level for the first time in a while. Price pushed and closed below it back here early September, and since then, every time it's been above that level, it has closed back below it, and new lows have been seen. Over here we had a bearish outside day that developed, and in the previous session though we ran all the way back up that range and took out that outside day high, which is right around 21s, 34.21s. That's going to be an important level to watch, but even more important here short term may be the previous session's high. That's at 1675, so 34.1675. Any failure to hold that level today could open up a rotation back toward the midpoint of the previous session's range. That's right here, that little dot right there. That's going to be the level that we could see as a magnet. That price is 33.74 half. So 74 half right now. We're trading 27 halves. Again, if there's a failure to hold the 1675s, we could rotate all the way back down into the 70s here. That's been about the midpoint the last 3 days, right around that zone. It's also right around the pivot point for the month as well. And again, if there's a failure to hold above that high, we rotate back down. We still have a soft uptrending market right now, and the fact that price closed above 3400 is very bullish. If price were to pull back, we could still see bulls defend and try to get this thing going higher. If price continues to hold above 34.16, the previous session's high, we may continue to hold these gains while kind of chopping higher. Again, the ability to hold above 3400 is very, very important and would open up the next wave of strength back to these highs. But there's still the potential to fail above 3400 even if we're trading here. So continuing to watch this. But at the moment, the fact that we're above 3400 and above the previous month's midpoint, 33.92 half, suggests strength at the moment. All right, let's take a look here at the NQ. You'll see the NQ is testing the midpoint as well. That's the 11.560 level. 11.560, very important level. Again, for this one, we are still inside a very clear trading range here that we haven't seen a violation outside this range yet. Despite wide swings back and forth within the range, we haven't seen a violation. We still have these highs which come in right at 11.6. That's about 35 points from where we currently are. 11.6 has been very important, because ever since that day where we closed below it here, early September, it has been offered each and every time we've been in the zone. So again, we're coming into 11.6. The day's high right now is 78.75, so about 22 points off of the highs would be a test up that in that area. We could see a wipeout a little bit. So watch 11.6, because if price pushes through it really nicely but then rejects and closes back below it by the end of the day, we could be looking at another failed high opportunity up here that leads us sharply back down within the range back toward the bottom of the now developing 9-day range. You can see down here on an 8-day basis, completely compressed, and 975 points of range could be seen. But now we have a 9-day range rather that's developing. So every time we increase a day here, the potential to explode higher in terms of point potential becomes greatly increased. So again, another over 1,000 points of range could be seen once we get a breakout from this developing 9-day range. So again, very, very clear trading range action here. If there's a failure at 11.6, we may rotate back down within the range. Until we get about above 11.6 or below 11.2, we're going to continue to be range bound with an upward bias. All right, let's take a look here at crude oil. Crude oil right now showing strength here, pushing away from the 40 level today. 40 being right around today's lows here, with price rejected basically the pivot range, the previous month's close, the midpoint of the key range, the $40 even level, and the FOMC key level, all of which are 40 for the most part, and took it bid here and is now back to recent highs. So it's testing the previous week's high here at about 40.80. That's going to be an important zone to watch here, the previous week's high. because again, if price can hold above the previous week's high, it starts to push through into the next area of resistance above, which would be about 41.80. So there's another $1 of upside that could be seen ahead. As of right now, we're trading 61% of ADR, so there's still more potential range ahead. On a 5-day range basis, we're averaging $2.09. So 1, 2, 3, 4, 5, big high range. Back here on a 10-day basis, we're averaging $1.76. So more range right now over the last 5 days. So today, if it can get through the 40, 85s, 41s here, it really opens up more upside ahead into the next resistance levels. A failure here, again, snaps us back to the magnet of 40. Let's take a look now lastly at gold futures. Gold is trading within 2 key levels right now that we've continued to watch. Number one is the 1874.20. That's the bottom of the key range right here. We talked about a trap here could lead this thing back up. We mentioned if we can't get above 26s, we may see a return for a test. But if we hold here, again, bulls have the upper hand. So bears are defending here, bulls are defending here, and you have two-way trade right now where price is pushed up, price is pushed back, now it's back up. And again, that's the range to watch. So when you have this narrow range that's developing right here, again, when you measure this thing out, 1, 2, 3, 4, 5, 6, 7, 8 days, we can bring this back up over here and measure it out over the last 8 days to see what kind of reading we get. And right now, over the last 8 days, we are at 50% of average range. That's right here. So again, we're looking at a potential breakout that could take us about 112 points. One direction or another, right? One direction or another. Right now, 112 points just from this 1900 level, again, puts us right around the 2010 level. A failure here puts us back into the 1790 zone. So again, this could be a big move up ahead. We're building energy, not only in the NQ, but also here in gold, and we could be looking at a pretty significant move once a breakout is established above this 1926. Would break this current down move, and we open it up. And then if there's a failure to hold the key range low, we easily could drop right into the 1820 half, which is the 25% expansion ahead. And that could be a level to watch for perhaps a bounce. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.